There are many loan options when it comes to mortgages. In this video, we're going to sit down with a local lender and discuss FHA financing. Let's dive in.
Okay, today we are here with Al Nelson from Cross Country Mortgage. He has an office in St. Croix Falls. Today we're going to talk about different loan types. FHA is another loan program that's commonly used. That's a government-backed loan program, correct?
Correct.
And
yes.
What sort of down payment and other qualifying factors would there be when it comes to an FHA loan?
Yep. So FHA, you need a minimum of 3.5% down. You can't put more down. We can do those. If I see a credit score in the 500s, my brain shifts over to we're going to need to do FHA on this loan because that's pretty much the only one that will do them for the most part. USD, I'll tell you, they don't have a minimum credit score, but they just don't give you an approval if your score is that low, typically. So we typically switch over to FHA. FHA lets you push the debt to income higher. They allow a lower credit score. If you don't have the 3.5% down, they do allow a gift from a relative. They allow co-signers if your debt to income is too high. We're doing one right now for a young lady, and her mother is co-signing. She's not going to live in the house. She's what we call a non-occupant co-borrower, meaning she's not living in the house, but she's bringing in her income to help her daughter qualify. Daughter has other income. I know she can afford it. She has other income we can't count. And so I know she can afford the payment. So we're allowing mother to come in and co-sign for her. FHA is the most lenient when it comes to bankruptcy. You have to be 2 years out of the discharge of your bankruptcy to do an FHA. USDA would be 3 years. Conventional is 4 years. So FHA is the most lenient when it comes to bankruptcy. It's the easiest loan to qualify for, the conventional FHA US.
I mean, the credit restrictions are obviously a lot looser.
Correct. FHA it's a program we use a lot when you run into lower income, higher debt to income ratios, lower credit score. We do a lot of FHA.
So if you had an FHA, you'd be paying PM mortgage insurance on it, right?
Correct.
Could you down the road, maybe 4 years into owning the home, go forward and try to refinance that into a conventional?
Yeah, we do that a lot.
Yep. So then you can maybe, if you have enough equity into it, you could probably drop that mortgage insurance?
Yes, only by refinancing. So mortgage insurance on FHA and the USDA loan are for the life of the loan.
Okay.
There's an exception to FHA. If you do a 10% down payment up front, as long as you don't make any late payments in the first 10 years, then it will go away. Otherwise, it is for the life of the loan, doesn't matter. I've had people that have had to do FHA because of, let's say, a bankruptcy they had 2 years ago. So their only option is FHA, and they're putting 25, 30% down. They still have mortgage insurance because it's an FHA loan, but it does go away. My goal for them would be to help get their credit up or whatever the other issues are, get them away from bankruptcy, then refinance them into a conventional loan when it's right to do that, as long as we get them a better rate. Yep.
Right. Yeah, there's a lot of things that factor in there, I suppose.
Correct. Yeah. It has to be the right time I like killing two birds with one stone, maybe dropping the rate and dropping the mortgage insurance when we do it.
It's amazing how much you can save when that rate goes down just like 1% or so.
Oh, yeah. Yes. And the mortgage insurance on FHA is calculated at 0.85, which is almost another percent.
Sure.
Yeah. The FHA is a great loan. Some sellers are a little leery of it, but for whatever reason, it's gotten a bad rap. But it's a great loan. We do a lot.
Yeah, I've done quite a few of those too with buyers and sellers and stuff. And there's things, like you said, you got to keep things or get things painted.
Yes.
You can do a lot of that stuff before the appraiser gets out there.
Correct.
And try to be proactive with it. And it's usually nothing too crazy, even if it's a small electrical thing. It's things are fixable. So
I think if sellers take care of that stuff up front, they're opening themselves up to way more buyers, which then increases the sales price. So,
Yep. It gets that demand up and opens it up to more buyers. Yep.
Correct. Yep.
For sure. Yep. All right. That's great information on FHA. Some people are intimidated by the process of going through getting a mortgage. The pre-approval process, that's pretty simple, right?
It is. If they're a W-2 employee, you can
Yep.
just do that same day.
Okay.
Get them pre-approved same day. Yes, I've had people walk in my front door and I can see they're visually shaken and nervous. And because until they walk through that door, they realize they have the possibility of buying a home. And when they walk through that door, I could tell them no. I usually
Right.
don't tell them no. I say maybe not right now. Here's what we need to do. We need to work on your credit, or we need you at your job a little longer, or we need to pay off debt or something. But it's once the biggest step sometimes for people to just walk through that front door. Yeah.
Mhm.
Yeah.
At least then they, can get the news, good, bad, or otherwise, or at least get started with it. Sure.
Right. Yeah. Correct.
All right. Thank you, Al, for joining us.
Yeah. Thanks for having me on this, Ben.
All right. Have a good rest of the day.
You too. Thank you.
Thank you for watching. I hope you got some good information out of this video. Please make sure you subscribe, like, leave a comment. Take care.